Chime added 400 customers yesterday. Your bank added 12. While you wait on your quarterly IT roadmap review, neobanks are onboarding accounts faster than you can approve a new checking feature. By the end of this video, you'll see exactly why legacy core systems aren't just slowing you down. They're actively helping your competitors win. Let me show you something most bank executives don't want to admit. You think the problem is technology, outdated interfaces, slow processing, systems that still crash during end-of-month batch cycles. But that's not the real problem. The real problem is this. Every day you operate on a core system that can't connect to modern payment rails, can't integrate with digital lending platforms, can't support real-time fraud detection. You're not just running slower. You're invisible to an entire generation of customers who expect banking to work like everything else in their digital life. Here's what's happening right now. The big three core providers, Fiserv, Jack Henry, and FIS, serve roughly 70% of U.S. banks. Most of these institutions are running versions that are 3, 5, sometimes 8 years behind current releases. And even current releases weren't designed for the API-first world we're in today. They were built for branch banking, for batch processing, for a world where customers came to you. That world doesn't exist anymore. In institutions we work with across the country, we see the same pattern. A community bank invests 18 months and $4 million into a core migration. They celebrate go live. 3 months later, they realize they still can't launch the digital wallet integration their customers are asking for. They still can't connect to the embedded finance platform a local business wants. They still can't offer instant loan decisions because their loan origination system can't talk to their core in real time. Meanwhile, Chime, SoFi, Varo, they're not banks. They're technology companies with banking licenses. Their entire infrastructure is API first. When a customer wants Zelle, they integrate in 2 weeks. When they want instant credit decisions, they build it in a quarter. When they spot a fraud pattern, they deploy machine learning models that scan transactions in milliseconds. You're not competing on service anymore. You're competing on speed, and your core system is an anchor when you need a speedboat. Let me take you inside one transformation. No names, but a regional bank we worked with last year. 53 branches, 800 employees, solid reputation in their community, running on a legacy Fiserv platform they'd been on for 14 years. They knew they needed to modernize. They'd been talking about it for 3 years, but here's what finally made them act. Their CEO got a call from their largest commercial client, a manufacturing company that had banked with them for 22 years. The CFO said, "We love you, but we're moving our treasury management to a Fintech. Not because we don't trust you, because your online portal takes 3 business days to process an ACH override, and your competitor does it in 4 hours. We can't wait anymore." That's when Robert Mitchell walked into our office, silver-rimmed reading glasses, a stack of vendor proposals, frustrated but not defeated. He said something I hear from executives every week. "We've been asking our core provider for API access for 18 months. They keep saying it's on the roadmap. We don't even know what we're waiting for anymore." Victoria Chen pulled up her tablet, showed him the metrics from similar institutions, showed him what API-first architecture actually means. Not just a tech buzzword, a fundamental shift in how systems talk to each other. She walked him through the real cost, not the cost of the technology. The cost of every customer you lose while waiting, every commercial client who leaves because you can't match fintech speed, every loan application that goes to an online lender because your system takes 4 days to process what should take 4 minutes. Here's what changed. They didn't rip out their entire core overnight. That's not realistic, and it's not smart. They started with a strategic modernization plan. First move, a PI layer integration. They built a middleware architecture that let their legacy Fiserv core communicate with modern applications without a full migration. Suddenly, their loan origination system, they moved to Abrigo the year before, excellent platform, could pull credit data, verify accounts, and push decisions in near real time. Their commercial clients could initiate complex payment workflows through a modern portal that felt like 2024, not 2010. Second move, they prioritized digital payment rails, integrated RTP and FedNow access, gave business clients instant payment options that actually worked. Third move, they deployed AI-powered fraud monitoring that scanned transactions as they happened, not in overnight batch runs. 6 months in, here's what happened. Commercial client retention jumped 11%. New account openings from customers under 40, up 32%. Loan processing time dropped from an average of 4.3 days to 14 hours. But here's the number that mattered most to Robert. Customer complaints about digital banking dropped 67%. Not because they built a prettier app, because their systems finally did what customers expected them to do. Work instantly. Connect seamlessly. Respond in real time. Victoria showed him one more thing. The competitive landscape map. Every neobank, every fintech, every challenger bank in their market. They all had one thing in common. API-first infrastructure. They weren't better at banking. They were better at technology. And in 2024, those two things are the same thing. Robert removed his glasses, looked at the numbers, said what every executive eventually says. We thought we had time to figure this out. We don't. So here's what you do this week. 1 action. Call your core provider. Ask them this specific question. How many production-ready APIs does our current version support, and what's the timeline to access them? Not roadmap promises, not future releases. What's live right now? If they can't give you a number and a date, you have your answer. The second thing, run an audit on one critical customer journey. Pick your most common commercial onboarding process or your consumer loan application flow. Map every system it touches, every handoff, every manual step, every place where data gets re-entered or a process waits for batch processing. Calculate the actual elapsed time from customer request to completion. Now ask yourself, if a fintech did this in 1 hour and you take 3 days, how long before that customer stops coming to you first? Your competitors already know this. You don't. Yet.